Hello everyone, Adam Hewison here from the digital studios of Market Club, and we're looking at the markets today and we're seeing what's really going on. Are the markets turning over? Are they becoming weaker? Or are they actually still in a bull phase? Well, if we're looking at the Dow, which is what we're looking at right now, on a candlestick charts, daily term, and you can see that the market hasn't really gone anywhere. You can just give a big sort of like shout out in terms of, I mean, look at this. You've sort of, since March, you've really gone nowhere in this market. So are we getting towards the lower end of the trading range or the midpoint of the trading range? The question is, all of our trade triangles, if we just look at those, are still very positive. Now, it will change. The intermediate weekly trend will change if and when we see the weekly trade triangle hit 17,924. Let me write that down for you. So the key level this week, and we only have a couple more days, today and Friday, is going to be 17,924. If it gets below that level, then you want to be out of the market, at least for the time being. But really, this is still a kind of a trading range, and we are below the 50 line, which indicates we are seeing some weakness, which is of course today. But I would not be surprised to see the market rally back today or even close down here. So I think that's the type of day we have very conflicting economic reports, and I think that's what's really making the conflict even more difficult to analyze at the moment. But the trade triangles will tell us what they want to do, and right now it's saying that they're all green and you have a 70%, so it's not a strong trend, not a strong upward trend, but it's still an upward trend. Pretty much the same picture with the S&P 500. All the trade triangles are green. We just tipped below the 50 line, indicating some potential more weakness, but reality there also, you are still in a bull market. The market has to go below 2083. Okay, that's the number this week. That's Monday, that's Thursday and Friday left, today and Friday. If it goes below that number, then you want to be out of this market, because that will then turn into a red triangle, indicating you should be on the sidelines. Now the Nasdaq is presenting a little bit of a different picture, because this is very firm when you think about it. It's really very close to its highs. And to be honest with you, I would not be surprised to see it make an all-time high close still. The highest close we've seen is 5,108.24. I think we could see the market actually close above that level, really even today or tomorrow. Let's see how that works out. But generally speaking, you're above the 50 line. The trend clearly is positive, and we have a very strong 90 score. So that's above the 70 score we showed you earlier. So the Nasdaq is the one to focus on if you want to be buying stocks. Now this is gold. You can see gold actually gave a signal today at $1,180 that all of the trends, strong downtrend, is in place. Now this key level here, the 1170 level, is going to definitely be a key level to watch for everyone around the world. That's going to be the last sort of bastion of support. If we go through there, then we're very likely going to hit the 1150 area. So let's see how that plays out. But generally speaking, if you're in the market, you should be short. If you're not in the market, you should just stay out of it for now. Now crude oil, a couple things I want to point out in crude oil that I think is important, and that is the longer term trend in crude oil, which is right here, is definitely positive. The intermediate term, which is the one we trade on, is negative, indicating weakness, and the short term is also negative, also indicating weakness. So these two here are negatives on this market, and we have a minus 70. So not a strong downtrend, but certainly a downtrending feel to the market. Plus you're below the 50 line. But again, you have had a big move up, and to come down, it's not such a big deal. We could see this market really sort of regroup and then start to go higher. But nonetheless, the key level right now is probably to be just on the sidelines. Last market we're looking at is the euro. And the euro, it's amazing to me that with all of the terrible things that are happening with Europe, Greece, you name it, the euro hasn't acted so badly, really. We're sort of still mixed picture, definitely a mixed picture, but if we see the market, let's say, go over the 115 level, 116 level, then you've got a bull market on your hand in the euro against the dollar. Who would have thought that just a few months ago? Generally speaking, we have a mixed bag. You have a mixed daily signal and a intermediate term downtrend. The intermediate downtrend saying you should be short the market only when this daily trade triangle turns red. That's the key thing. So let's watch that very carefully. Plus you're still over the 50 line, indicating potentially either sideways or a little bit higher. But score is 65, indicating a trading range, and you should be looking at you should be looking at this market as a trading range at the moment. I'm Adam Hewison for Market Club. Every success, and remember, when two women get into a fight, it's never pretty.